You want to get into day trading as a business owner, but you don't know where to start. And in this video, we're going to talk about it so simple as possible to make you understand different kind of trading assets and of course the benefits. Me, myself, I can only talk about day trading futures, and I'm going to tell you why I think it is one of the best assets to trade and also to get started for a beginner. So the first thing is that we have different kind of assets. That means we have options trading, we have futures trading, we have also stock trading. There's this rule that we need minimum $25,000 on the account, or else we're only allowed to place around like 5 trades a week. But when you day trade futures, you don't need to have the $25,000 on the account. You also can place way more than 5 trades a week, and you don't need, this is something what's really cool, you don't need $200,000, $300,000 on the account just to buy just like one contract. It means just to buy one share of the S&P 500 unleveraged. You can literally leverage. And this is how it works. So when you trade futures, you have a thing that is called margin. That means margin, for example, is if the market has a total value of $250,000, the broker is saying you can trade $250,000. All you need to do is like taking a credit. You need to put back $500 if you just buy one time for $250,000 of leverage. And then if the market goes up, and this is like the market can move by a minimum price point, minimum price fluctuation it's called. That means each tick, maybe you have seen it in Forex trading, they call it pips, is $12.50, for example, with one contract. That means we have bought one contract, for example, we have deposited maybe like a $10,000 account, and then $500 will be taken away for margin. And then when entering the market, you can literally see that when the market goes just a bit up, it's always $12.50 making money going higher, starting from the entry point where you pressed, for example, buy market, it's called. But if it goes under your point, it goes always minus $12.50 for each minimum price movement, fluctuation it's called, when the market is going lower. So here's now the thing, and this is something what's really cool, is that you could, with a $10,000 account, leverage more than 1 or 2 million. It's absolutely insane. That means you would see like $50 or $100 just by if the market is going minimum up or minimum down. That means you could, that's not a financial advice, but it's very possible there to duplicate an account. I made here several videos with trading results, for example, on this account. Check them out after this one. What is important first is to understand these different kind of assets and just the advantage of day trading futures. Whatever you have did so far, the awesome thing here is that we just are not limited by that. And then the next thing, what is really awesome, is that we can limit our losses. That means when you see, for example, that the market was going up for 30 minutes, there are markets, they continue for the next 30 minutes, like the S&P 500 futures or the euro to US dollar. But the S&P 500 futures is one of the best markets because money-making activities are trading signals. That means when you, for example, sit down for an hour on the computer or 2 hours, it depends always on how many times can you see that you can adjust $100, for example, to make either $300 based on a specific strategy, or if a trading strategy is even better, to make $500 on average. And then the next one is like, what about quantity of these signals? That means if you, for example, trade just for 2 hours, between 9 a.m. Central Time to 4 p.m., anywhere where you are available for 1 to 2 hours. If it's 2 times a week, every 2 weeks, it doesn't matter. You just sit down on a computer. Each week, there are different kind of market phases. That means like sometimes the market is more trending. Sometimes the market is more in a consolidation phase. And if you see there your setup or this trading signal, that means that is just a pattern. For example, if you say a green candle is what I'm going always to trade, with entering when the green candle closes, and when the stop placement is right where the bottom of the green candle is, at what we used as a reference point, for example. And then the position sizing, how much we leverage, it depends like that we want to adjust just $100 on average. You may have maybe seen it with the demo account, or maybe painfully with a real money account, that when we enter a trade, that we maybe lose like 20 to 30% with an account. That's just what happened to me in the beginning when I was trading gold, for example. I was entering the trade. And then I lost like 30% of the account right away in the beginning. And that's because I didn't understood how a stop loss works. That means money management. When you day trade futures, the awesome thing is that we are not limited by our trades and money. What is really good, we have literally a stop loss. This is so awesome because now we can say, if you see the market is going up, you can buy. You can literally calculate how much money you want to lose on a specific length. If you say, for example, on this length, you assume the market is not going to do downwards, then you can say, now on this length, you want to lose $100, $500, $1,000, or even start small. And this is called micro futures. This is the absolute sweet spot. Why I think this is also way more better than different assets. You can first start with micro futures. And that means, for example, you could start with a $500 account, adjust like $10 to $15 a trade. And if that trade works with a good trading strategy, make like $50 to $75 by just trading a green or a red candle using the trading strategy, which is a small green candle, a 1 minute chart, what I'm showing in the other videos, for example. So if you, for example, compare this to options trading, the problem what I see is that the first one is that we need to trade for multiple hours. That means like for 3 hours, 5 hours, and it's hard to concentrate. I mean, power time is like 1 to 2 hours, and then it's just already hard to concentrate. And the other thing is just like, if you concentrate on market moves are just happening within like 35 minutes in the push. So that means the market is staying on a price point for 30 minutes up to 5 hours, and then it pushes out within like 35 minutes. That's what you can imagine. That means just like trading 2 hours more will not better your trading. It's just about like the smaller the chart, the smaller you can adjust the money management. And now if you have like a green small candle and you see how the market is pushing in one direction, what usually just happens within 30 minutes and then the market is already done, then we can adjust like $100 to make $500 or adjust $10 to make $50. And of course, there will be many losing trades. And this is the main reason why you should not trade first with real money. You should first do it with a demo account using TradingView. TradingView is a trading platform that is absolutely for free. You can use the free account trading with real money and even with the demo account if you do this right. TradingView will offer you to pay $30 a month, and that's $360 that you're aware of this one. And with $360, you can open a futures trading account, and you could even trade with a futures trading account. And I have several students with $500, they mostly started with that account size, made their first $2,000, $5,000, even up to $10,000 within the first 1 or 2 years trading. But first learning how to trade with this demo account, with the trading strategy, understanding the money-making activity that when we sit down for 1 to 2 hours, how many times can we see a trading signal? That means to put in money. And then how many times of it did it work, like to put in $100 in to get 5 times the amount out? Because a very big money-making activity is that you collect those signals. You don't want to trade just a signal just because a coach is saying it or a YouTube video. That's something what's important. You need to see that it works with the current market condition that is changing every day, every week, every month. That means, for example, if we take like a specific amount, let's just say we take like $20,000 and we divide it into $1,000 per trade. And we say like we want to invest $1,000 a trade to make $5,000 a trade in average. Then the thing is that we don't want to place 20 trades within just a week. We want to place maybe like 10, 15 trades within 4 weeks or even 7 weeks. And that's just something what's very important to understand is that the market is running very different over days and weeks. And it's not about just trading the trading strategy every day and now it needs to work. As if, for example, when you have your business, you're going there, you're just doing your work and you see already it works. And trading is just different. You just have different kind of market phases. You need to do the same behavior pattern. And then when you see that you behave the same, but the market changes and you make money there, that's then where you see it's good. That means just because you lose money, it's not a reason just to change the trading strategy. It's more to understand first the market first, not trade at all. And then afterwards, looking forward, like how good is even this trading strategy? That means if you see, for example, that the market is doing each week, 1 time, 2 times a week, a specific push in a direction, like you see it stays in one area and then it pushes away. Your trading strategy should have the option to enter a trade when you see it's pushing in that direction. If your trading strategy is not giving you that. For example, if you see the market is for 1 or 2 weeks in a consolidation phase, it's just in one price area, then your trading strategy now says you should buy or sell, but you cannot see that the market is going up or down. I think that's pure speculation. That's pure gambling. So what happens first is that we need to concentrate on market experience first, seeing that it makes totally sense that the market goes in that direction. And then the trading strategy is the vehicle that should help us with money management. That means that we get plenty of signals, quality of signals that we can adjust $10 or $100 to make, or $1,000 even to make 5 times the amount on average. And then if that's the case, then we literally look forward like, okay, now we have like 20 or 50 trading opportunities. Which of these do we see more in the past, before we started like an hour, that the market was trending in one direction, that we can continue trading in the same direction? Or which of these days were we able to see with those signals that before the market was reaching a high or low, just has better quality? And then from there on, then it makes sense for us to start with a not real money account, with a demo account. And then once seeing to duplicate around the first demo account, if it's a $10,000, a $20,000 account first, then I think it makes sense first to start with micro futures, maximum of $500. Because when you trade with real money, it is going to be way different than just trading with a demo account. But what I can tell to you is that if you have a strict rule set, if your rule set is not to place more than 3 trades or 5 trades a week in average, or for example, if you say like you're only allowed to trade just a green candle or a red candle or color switch, what I really love, or if you say like before you enter a trade, you must see that you can adjust $10 to make $50 on average, or like $100 to make $500 on average. This will all transfer also to the real money account if you have done this properly with the demo account. And this is then what I see with a lot of my students, like more than 50%, they start within the first 3 to 7 months then going to trade with a real money account. And I'm making plenty of videos about this. Just check out the other YouTube videos, and I hope that this video gave you some understandings about futures trading, which you all love. Good trades. JT out.